Well, good evening, all. Ira Epstein, and here we are with your Wednesday, May 8th financial market wrap-up. And what a day. It's quiet. And when I tell you quiet, it was one of these days where you're watching paint dry on a wall. You're not getting a lot of activity. The market's gone into a slowdown. It's like it's waiting for something. Well, you know, one of the things we know it's waiting for is what's the situation between Israel and Hamas. You got a late day bid in all of the energy products. I don't know what that meant. CNN has had the best coverage on what's going on. I have a news feed that updates about every 20 minutes or so with a new story as to what they're discovering. And today they were saying that Israel's tanks that I showed pictures of in my report yesterday, well, now the bulldozers are there and they're actually taking down buildings in the immediate parameter of the Gaza crossing, and they have the soldiers on the ground, and they're spreading out 1 mile from the crossing. So they're obviously looking for tunnels, looking to see how the arms are getting to Hamas, and they're out to cross that. They haven't been in Rafah this way before. Now they're there, and obviously that's why they told 100,000 people, you better leave because we're coming in with extreme force. I really hope Hamas is listening and understands what's the next move. Why we're not hearing anything when we've got our CIA director there, other countries are there, everybody's trying to get it done. We're not hearing a thing. The one thing I'll be blown away with is if Israel says it does agree to pull all its forces out of Gaza. I don't see that for a long time. I think eventually they don't want to be the occupying force there, but you've got to have a government they can deal with, and I don't think Hamas-led government's going to be the one they're going to deal with. When we look here at the E-mini weekly chart, the bias is still up. We had one correction a couple weeks ago back to the 18-week average. By the way, that's my mistake. I had this correct before. I don't know why it came back, but that's the 18-week moving average, not the daily. I'm going to correct this right after this. As we look at the market, we can see that it's been coming up. The daily chart, higher lows, higher highs. Do you agree? That's an uptrend. The market is over the 18-day average of closes. That's bullish. You're not going to get the 18 on this pattern to cross under the 100 very quickly. That's friendly on the market, but you're at a resistance point of the upper Bollinger Band. So that's what's stalling the market, and you're overbought, not embedded. Now, if you embed here, you could get another force in this market. A week from today, we get the CPI number. If the number is weak, that adds fuel to the fire of the Fed saying, okay, we've got 175,000 new jobs. We saw unemployment tick up. We saw labor costs tick down, and we're seeing CPI fall. Conversely, if CPI comes in strong, you could have all that going on. They haven't beaten inflation. So that is the battle that you're fighting right now. I can't think of anything else to say about that. When we look at the NASDAQ, it's overbought. It's the same pattern. You're coming up to resistance areas. To get really friendly, the 18-day average should cross over and close over the green. That would be another reversal to the upside. When we take a look at the Dow, still very much in an uptrend, one of the leaders. What bothers me a bit in the stock market is if you're watching what sectors are leading the market up, it's utilities. Utilities normally go up if something is about to happen negative. I don't get it. So it's a warning sign to me, and immediately the hair on the back of my neck goes up. Just how bullish is this situation? But I don't want to be a fundamental trader. I want to be a chart trader. And that's where I'm at. So you either embed and I get very bullish, or you correct now. I don't know which one of the two is about to happen, but right here, there's no edge in the market. When we look at the 10-year note, you have higher lows, higher highs, but the brick wall. You hit the Bollinger Band and you're overbought. This is the theme through the market. This theme began on Friday. It actually began, truthfully, Wednesday and Thursday just before Friday, as short covering came into the market, waiting for the Friday payroll numbers. And when those numbers came out, away you went. Now, we did get ADP along the way, Challenger Gray. We had a bunch of other smaller numbers coming out that were giving us sort of mixed signals. But that drop, big drop that we saw in the unemployment kicked all these markets. And now in order for them to make another move, it's like every bull market, you got to feed it. It's not getting what it needs. It's seeing earnings. Earnings are doing okay, but now can you make that next move? And on interest rates, you're starting to get now yield coming back into, not leaving it, back into the 5-year note. Suddenly this has lower highs, lower lows. So that's the most sensitive. You've got sideways action in the dollar index, and you're trying to make sideways action more or less in the euro. It's certainly not a trend. You have a lower low, higher high. And again, that upper Bollinger Band stopped all these markets. You're back to neutral territory in the British pound. I told my traders this morning, I said, not my cup of tea to go into the Bank of England statement, but the pros are likely to buy the 18-day average with straight stops right under that low. It was a 20-point risk. And so far, it's held up. That's all I can say. You know, it's not a trade record, but it's an observation and a strong one right there. Bitcoin, this was a bear market rally into the 18-day average, that line in the sand, and the market failed against it. Now, suddenly WTI is losing the oil, and at the same time, you're getting a little bit of a bounce. I know I have been consistent in this, telling you that the first challenge of the 200-day average in gray and the green, the 100-day average with the Bollinger Band, that's where I'm expecting the algo, the program traders to all be covering shorts. And it certainly looks like that was the case. The same thing right here in the WTI. That doesn't mean it has to change, but it's the spot that I think big shorts were taken off. Now the market's looking, what is the next move? They can always put them back on, but that was the logical spot looking at those three combinations, two moving averages and the Bollinger Band, to take money off the table and step away. I feel the same way here in the gasoline. I said this to you yesterday, and I told my traders that this morning. This is where I think the market's going to try to make a stand. Now, typically, you rally from next week in gasoline. You can start right now around the 7th, and you go up for about another 10 days, and that's about it. So you typically get a bounce in this. If you go back, do your looking at more research and some of the others that I do, and we have free offers to them. I showed you that the other day. Those are things I always look at. And then we come to natural gas, which has come up here. Natural gas is giving me a story that looks like we have made a bottom. I mean, you've got to get back through these lows to tell me, nah, this has just been a false move. It's not acting like it. The market could have gotten to the Bollinger Band and stopped. It didn't. It went on to the 100-day average. Yeah, this is where trouble should be right now. And the market could pull back to the 18-day average. But I am now no longer in the bear camp. Until these are taken out, I'm back into the friendly camp and thinking natural gas, for all the gas we're producing, this market's looking ahead and saying everybody wants ours. And guess what? If you look at European gas prices, they're soaring right now. So people are looking to get more gas for the wintertime. And I know you'll say, Ira, what are you talking about? It's May. Not how it works. Got to put stuff in storage. All right. If you like these comments and other ideas that I throw out, I'd like you to join with me. And how you do that is you just simply join in the mornings. All right. If you trade futures, stocks, ETFs, I start off at 6 a.m. recording a futures video. And the charts are going to look just like this. They're going to be jet black. They're going to have all these other studies on it that you don't see right here. I explain them and I teach them. I expand them so you can see what is going on. You will find that after a week or so, you're going to go, oh, I got that. We're going to talk fundamental and technical analysis. On the website, they'll be posted right here. You'll be able to get to them. That's pretty easy to do. And if you have our phone app that comes with this, how you get that is I'll send you an email. The videos are posted. You can either open the phone app or go on your PC to the website and view everything. But you're always told what's happening and when it's happening. And we'll look at a combination of daily charts and weekly charts. There'll be 40 in the futures, 40 plus, and 40 plus in the stock, the spider, and the ETF typically. And as we do that, we'll add special report videos along the way. Also, you can always write me as subscribers, and if you have something you want me to cover, I'll generally make a short video for you and answer it that way. And sometimes you get my beautiful face in it. Points of entry, exit, profit objectives there, 6 days a week. So on the weekends, you get the weekly chart version, and on Monday through Friday morning, the daily. So you're getting quite a few videos all the time. Just go to iraepstein.com research, move your cursor up to the top here. You'll see an icon with it, and join me. I'm Ira. You have yourself a good day. I'll see you in the morning.